Let's dive in. This week, the world's most famous cryptocurrency is putting on a show of patience and uncertainty, and everyone from Wall Street to Main Street is watching closely. Bitcoin has been stuck in a holding pattern, hovering around $113,630, barely budging for days. The price action has been so flat, it's almost as if the market is holding its breath, waiting for something, anything, to break the tension. Earlier in the week, we saw a sharp 3% drop that rattled nerves and sent a wave of caution through the market. Since then, it's been a game of wait and see, with traders and investors glued to their screens, searching for the next big signal. But this isn't just another episode of crypto drama. What's happening with Bitcoin right now is a mirror of the broader uncertainty gripping global financial markets. Economic data is mixed, central banks are sending conflicting signals, and no one seems sure what comes next. Investors are paralyzed, afraid to make big moves with so much at stake. The fear of making the wrong call is keeping many on the sidelines, and that hesitation is showing up in the charts. We're witnessing classic consolidation, bulls and bears locked in a tense standoff, neither side willing to blink first. It's a psychological battle as much as a financial one, with both camps waiting for a decisive catalyst. The next move from here could set the tone for weeks, maybe even months. A breakout could spark a new rally, while a breakdown might trigger a wave of selling and renewed fear. Right now, risk appetite has soured. When fear rises, money tends to flee risky assets like crypto, and Bitcoin is no exception. The mood is cautious, and every headline seems to add to the anxiety. Despite all the progress Bitcoin has made over the years, it's still seen as a speculative bet by many traditional investors. That reputation means it's often the first asset to feel the chill when uncertainty takes hold. So as nerves ripple through the financial system, Bitcoin's momentum has stalled. The market is in a state of limbo, with everyone waiting for a sign of what's to come. This week is all about caution, patience, and waiting for the next big catalyst to shake things up. Until then, the sideways shuffle continues. Up next, we'll break down what everyone's watching, and why it matters for Bitcoin's next big move. The event freezing the markets? It's not a war, a tech crash, or a political scandal. It's something quieter, but with the power to shake the world's financial foundations in a single morning. The Jackson Hole Economic Symposium. Every year, this remote mountain town becomes the epicenter of global finance, drawing the sharpest minds in economics and policy. It's where the world's top central bankers, including Fed Chair Jerome Powell, set the tone for global finance. The stakes are enormous. Decisions made here ripple through every market, from stocks to crypto. Journalists, investors, and policymakers all converge, hanging on every word, every hint, every subtle gesture. Powell's speech is the main event. His words can move markets instantly. A single phrase can send billions of dollars surging in or out of assets worldwide. The Fed's main tool is interest rates, and Powell's hints about future moves ripple worldwide, especially into crypto. Even a slight change in tone can trigger a chain reaction across continents. Investors are desperate for any sign of a rate cut, which would fuel risk-taking and boost assets like Bitcoin. The hope is that easier money will reignite the risk-on rally, but if Powell sounds hawkish, focused on fighting inflation, markets could tumble. The threat of higher rates keeps everyone on edge, from Wall Street to Main Street. That's why Bitcoin's price is stuck. No one wants to bet big before Powell speaks. The uncertainty is paralyzing, freezing both bulls and bears in place. This is the ultimate wait-and-see moment. The entire financial world is holding its breath, waiting for a signal. Traders are sidelined, watching for Powell's signal. Every second feels like an eternity as they scan for clues. Will he open the door to stimulus, or warn that inflation is still a threat? The world is listening, and the consequences are massive. The answer will set the next trend for Bitcoin and the entire crypto market. A dovish Powell could spark a rally, while a hawkish tone might trigger a sell-off. Everything hangs on one speech. In this moment, Jerome Powell truly holds the keys to the future of global markets. Let's talk interest rates. Just last week, markets were nearly certain a Fed rate cut was coming in September. That optimism pushed Bitcoin higher, as cheap money fuels speculation. But now, the odds of a September cut have dropped sharply, from over 90% to just 73%. Why? The Fed's July meeting minutes showed most members want to keep rates steady, fearing inflation could flare up. Powell's been non-committal, especially with inflation risks from Trump's tariffs. Plus, strong U.S. economic data, like a robust Purchasing Managers Index, means the Fed feels less pressure to cut. A strong economy is usually good, but here it means no rate cut relief for crypto. The result: fading hopes, stalled rallies, and anxious investors. The market's now bracing for higher rates to stick around. That's why crypto is in limbo. The September dream is slipping away. Why does the Fed matter so much to crypto? The Federal Reserve, often referred to as the Fed, is the central bank of the United States. It has a significant influence on the economy, and by extension, on the cryptocurrency market. It's all about interest rates. The Fed sets the benchmark interest rates, which affect borrowing costs across the economy. When the Fed raises rates, borrowing becomes more expensive. High rates are kryptonite for Bitcoin. Borrowing gets expensive and safe returns from bonds look more attractive. Investors tend to move their money into safer assets like bonds, which offer guaranteed returns. When you can earn 5% risk-free, why gamble on volatile assets? This is a critical question for investors. The allure of high but risky returns from crypto diminishes when safer options are available. This sucks money out of crypto, which is always first to feel the pain. The crypto market is highly sensitive to changes in interest rates because it relies heavily on speculative investments. We saw this in 2022 and 2023. The Fed hiked rates, and Bitcoin plunged into a brutal bear market. The correlation between Fed rate hikes and Bitcoin's performance was evident. As rates rose, speculation dried up and capital fled. Investors pulled out of risky assets, leading to a significant drop in crypto prices. But when the Fed signaled it was done hiking in 2024, Bitcoin rallied hard. The mere hint of a pause in rate hikes was enough to rejuvenate the market. The mere hint of cheaper money brought investors back, chasing higher returns. The prospect of lower borrowing costs and higher liquidity made crypto investments attractive again. It's a clear pattern. High rates push crypto down, low rates lift it up. This cyclical relationship between interest rates and crypto prices is a key dynamic in the market. That's why Powell's speech is so critical. It sets the wind's direction. Investors hang on every word, looking for clues about future monetary policy. The market is waiting for a signal headwind or tailwind. The Fed's guidance can either propel the market forward or hold it back. Crypto's fate is tied to the Fed's next move. Every decision made by the Fed has a ripple effect on the crypto market. Watch the rates, and you'll understand the market. Keeping an eye on interest rate trends is crucial for predicting market movements. That's the real driver behind every price swing. Understanding the Fed's actions is key to navigating the volatile world of crypto. While Bitcoin's been flat, altcoins have taken a beating. When Bitcoin sneezes, altcoins catch the flu. And this week, losses piled up. Profit-taking hit hard after a strong August, as investors cashed out amid Fed uncertainty. Ether bounced 3% Friday but still closed the week down nearly 1%. XRP was flat Friday but down 5% for the week. Cardano dropped 3.7% in a day, losing 9% for the week. Solana slipped too. Even meme coins like Dogecoin and Trump couldn't escape, though their losses were smaller. The message risk-off sentiment is everywhere. Investors are dumping speculative altcoins, moving to Bitcoin, stablecoins, or exiting crypto entirely. It's not just a few coins. This is a systemic trend. When fear rises, altcoins are the first to go. The market's in full retreat from risk. Amid the gloom, Ripple dropped big news: a partnership with Japan's SBI Holdings to launch the RLUSD stablecoin in 2026. Japan's clear crypto regulations make this possible, offering a legal path for stablecoins. RLUSD will be pegged to the US dollar, targeting Japanese businesses and institutions. This isn't just another stablecoin, it's about building real financial infrastructure in a major economy. Ripple's move shows that despite market jitters, real-world adoption and innovation are moving forward. For long-term investors, this is a bullish sign for crypto's future. This week, reports surfaced that China may develop its own state-backed yuan-based stablecoins. Normally, China news shakes the market, but this time, crypto barely blinked. Years of bans and tight controls have made traders skeptical of any real impact. China's stablecoin would likely be for domestic use, tightly controlled, and not open to global markets. The market sees it as an extension of China's digital yuan, not a crypto breakthrough. The muted reaction shows how much the market has matured. Headlines from China no longer move the needle unless they change the global game. Let's connect the dots. Right now, crypto is at the mercy of macro forces, not its own fundamentals. Jerome Powell and the Fed are in the driver's seat and the market's obsessed with interest rates. Bitcoin's stability and altcoin weakness show investors are de-risking, bracing for whatever Powell says next. Meanwhile, real progress, like Ripple's Japan move, continues in the background. The key for your portfolio: know your strategy. If you're long-term, don't panic over short-term macro noise. Understand why the market moves and react logically, not emotionally. The current pause is all about the Fed. Once there's clarity, a new trend will emerge. Looking ahead, all eyes are on the Fed and Jackson Hole. Powell's speech will set the tone. Dovish, and we could see a relief rally. Hawkish and crypto could drop further. Bitcoin's $113,000 support is key. Break it, and we may see new lows. Altcoins remain at risk if fear persists. Stay patient, don't react to rumors, and wait for real news. Remember, macro cycles come and go, but crypto's long-term story is still being written. Next week, the Fed takes center stage. Get ready for volatility.